All right, so we've started recording. And again, welcome for those of you who've just joined us. This is our Business Fundamentals Lunch and Learn series. Again, the goal for these was to try to create bite-sized webinars for business owners to really hone in on a specific topic, give you a chance to interact with each other and share some best practices. This is the fourth session in our first module. The first module is Know Your Numbers. You can see the other sessions listed here that we covered last week and earlier this week. Today's topic is risk management. If you missed any of the previous three, or if you want to go back and revisit them, you can go to our YouTube page. Go to YouTube, search for Greater Hartford SCORE. You will see all of the webinars that we've done as part of this series and other webinars we've done. We've got all sorts of playlists there, a lot of great valuable information for you to watch on your own time. And also, if you subscribe there, you'll be notified when we put new videos up from other webinars. We've also set up our next series, which is going to be creating a winning marketing strategy. That one will be starting on June 12th. More information to come on that one. Keep an eye on your SCORE emails. You'll see the promotion for that coming out very soon. But that one is going to be a great series that I think you got a lot out of. So what are we going to talk about today? First, we're going to cover objectives of risk management. Why this is important. We're going to talk about common internal and external risks. We're going to talk about how to identify those risks, how to prioritize them, and how to think about mitigation plans. And then we got time for Q&A. If you have questions as we go through this, or if you have best practices that you employ as part of running your own business that you think other business owners might benefit from, this is a perfect topic for you to put in the Q&A. Kathleen's going to keep an eye on that as we go through the next hour. Now, as we go through this presentation, I was working on this one yesterday, and every time I have taught risk management, is the implication for a business owner can be, oh my God, so many things can go wrong for my business. What am I going to do? So I want you to keep some thoughts in mind as we go through this, because I've got a lot of content today that you may want to revisit in the webinar down the road, but a lot of ideas out there for you to think about risks that could impact your business. But it's important to remember a few key facts. First of all, there's risks everywhere in life, especially in running a business. And just like in life, you cannot eliminate all the risks. So in thinking about risk management for your business, there's three main steps. The first is to identify the risks that are out there that could impact your business. And we're going to go through a number of examples for you to think about. The second step is to prioritize. And I'm going to give you a matrix that a business owner that we've worked with in the past who has taught a webinar on risk management that is on our YouTube page. She had a matrix that I lifted and put in this presentation with full credit for her because she did a phenomenal job explaining it. It's a prioritization matrix to help you think about how to manage your risks. And then we're going to talk about some suggested mitigation plans. And some may be more obvious than others. But I think the most important thing to take away from this is you're going to have to accept some risks in running your business. If you worry about trying to mitigate and eliminate every single risk, you're going to kind of drive yourself crazy. So we're going to help you focus on the most important ones to focus on. All right. So we're going to start with internal risks. So the first ones are what we call human risks. And these are ones that you can see on the page here. There's a lot of ones. Some of them may be more obvious than others. If you've got employees, you need to be concerned about maybe some theft or some fraud. Keeping in mind that they know what they need to be doing as part of their job and making sure that they're not doing anything nefarious that could impact your business. Another common element with employees that might not be so obvious is what could happen to your business if you've got employees with low morale or they're dissatisfied with their job. And it could be various reasons. It could be something that's happening inside the business or something external to them that is impacting their performance. That could have a ripple effect on your business where if they are not performing well, it could impact customer service. It could impact product quality. Or if you've got somebody who's really disgruntled, they could do something that could impact your business through your systems or machinery or something else, or your customer relationships. The last one to mention here is something that a lot of us don't like to think about, but it is a risk to your business. And that is, if God forbid, something were to happen to you or key employees in terms of getting sick or passing away. So just something to think about in the realm of the human risk element. The next topic that are internal risks these are some common ones that are across a wide variety of topics. Now, some of these are going to be applicable for some businesses more than others. If you're running a service business, they may not be applicable. If you're running a machinery business, they may be applicable. So the first one is if you've got like a manufacturing company or you've got a landscaping business as an example I've used before, If you've got equipment breakdowns, if something breaks down, you have a mower, you've got 3 mowers and one of them goes down, what are you going to do to service your customers? So thinking about any damage to major equipment, anything that's getting older and needs to be replaced. And if you do get something new, how do you integrate it? If you're running a manufacturing shop and you put a new piece of equipment in, it's going to take you a while to get that integrated, to get people trained on it. That may cause a slowdown in your production output. So that's the thing to think about if you've got fixed asset equipment that you're managing. A lot of businesses are working with information technology. So you need to think about any backups, making sure that you've got backups of all your critical customer information, vendor information, financial information, using some sort of either secondary hard drive or backing up to the cloud, making sure that you've got sufficient backup. And also, if you've got a website, making sure that you've got power and connectivity and keeping your website up and running, as an example. Some other risks that could be internal are cash flow risks. We talked a lot about cash flow budgeting on Monday. If you have unexpected costs that come up for your business, that could impact your business risk and your ability to maintain continuing business operation. Or if something happens with your financial situation and your bank decides that you're not creditworthy enough to continue your line of credit, that could cause you some cash flow risk. The last item to mention on this slide from internal risks are things that are employee related or incidents, like if you've got worker related injuries, if you've got a heavy manufacturing facility or maybe a restaurant. And then these last 2 categories are things like if you've got, let's say you're running a car repair shop and you've got customers' cars in your on your facility for a week at a time while you're repairing them. If something happens to their automobile while it's in your possession by one of your employees, that's a risk to you. And then the other could be if you've got somebody else who does damage to your property itself. So some of these may be more obvious than others. And you'll see that just going through these first 2 slides, you may be thinking, oh my God, all of these things could go wrong. What do I do? Just pause that thought. We'll get to some ideas on how to think about it. So we talked about internal risks, all the things that are inside your business, technology, equipment, employees, your cash flow. Now let's talk about external risks. These are things that are out in the environment that could impact your business from an external lens. These are much harder to identify because when you're looking at internal risks, it's easy to look around and see what's inside your business. The external ones are tough because you're trying to find what else is out there that could impact you. So here are some examples of things to think about. The first couple are things around what we call concentration risks. So if you've got a small number of clients or customers and you lose one of those, you're heavily concentrated with a few small customers, that could have a big impact on your business. Same thing with employees. If you're a solo entrepreneur and you've got one person who does a lot of key functions, if they decide to get a new job and you all of a sudden have to hire somebody else and replace them, that could be a risk in terms of how you can maintain your customer service and production output. Impacts to sales prices in the fluctuating markets. If you've got a new competitor that comes in that's got a similar product or service, but the price point is much lower than yours, how do you react to that? Increases in vendor costs. This has been one that has been, a huge impact on every business the last couple of years. We've seen, record-setting inflation the last year or two across a wide variety of industries, and this has had a ripple effect on just about every business. So how to handle those vendor costs? Can you push some of that into your pricing? Can you cut other costs? Can you find different vendors? Those are some mitigating actions to help offset that. Oil and gas prices, same kind of thing. And then the other, option the other possibility as it relates to your cost structure in the competitive environment is any impacts on your fixed costs. If you've got a lease and all of a sudden your rent's going to go up because your landlord, needs to pass along a rent increase, that's going to have an impact on your financials. So how do you plan for that? The last category I've got here on this slide for external risks are the business environment. So thinking about changing laws, could be a tax law, could be a new labor law, it could be a zoning law, weather, natural disaster. You can't really do anything about these, but to the extent you think about what would happen and what you could do to protect your assets and your business continuity, that's something you can consider, but you obviously can't stop it. And then impacts from the community. This would be an example like if you're in business and you're relying heavily on foot traffic and you're in a small downtown shopping area and you've got a retail location and one of the big stores in that area decides to close and move out, and all of a sudden the foot traffic in your area is going to go down. Or maybe there's a change in some of the community laws that happen, and or maybe new business comes in. So just keeping in mind what's going on in the community and how that could impact your business. All right, identifying your business risks. There's a lot of information on this slide, so I'll go through this kind of slowly. The first thing we think about are common warning signs. Now, this is not exhaustive. This should be considered an initial brainstorming list. I mentioned concentration risk on the previous page. If you're relying on a small number of customers or maybe one product, that could be a concentration risk if a competitor comes in and offers something more compelling or at a better price point than your product or service. If you've got one or a small number of vendors, what do you do there? I had a client I was working with a couple of years ago who was using an overseas vendor, and they had the vast majority of their product coming from that overseas vendor. It was located in China, and all of a sudden they were having massive shipping delays, and they were having their products stuck in these shipping containers, and they just couldn't get them. So they had to think about, what do we do to maybe work with another vendor who can still make our product for us? And how do we can still maintain our customer service instead of just calling their customers and saying, it's going to be delayed and we don't know how long. So thinking about a reliance on a small number of vendors is also an external risk, a warning sign to think about. We talked about the financial statements over the last week or so. And if you recall, I looked at, when I was sharing with you the balance sheet, we talked about the balance sheet being a measure of the financial health of a business. You want to have, assets in excess of liabilities. You want to have a positive book value. But if you've got we talked about one of the bad examples being a business that was heavily leveraged, meaning they've got a lot of debt relative to their assets or their equity. That means that they're going to be facing a lot of bank payments. So this could be a potential warning sign as you look at your financial statements, looking at your cash flow. How is your operating cash flow performing? How is your balance sheet look as it relates to debt and equity? Then the next few are things that could happen where somebody may be doing something if they've got access to your accounting records or your bank records or your computer systems. Keeping an eye on some standard reports and looking at some data if there's others who have access to information to make sure there's not anything improper going on. The other common warning sign is high employee turnover rate. If you've got a lot of people and they've been, they haven't been staying long or they've been leaving quickly, understanding why, what are the root causes? And sometimes those can be really difficult things for a business owner to consider, because sometimes they've got to look in the mirror and say, maybe I'm the problem, maybe how I'm managing them, maybe how I'm training them, maybe how I'm giving them feedback. And we'll talk about some best practices in a little bit, but that could be a problem. Then there's some other sources that are out there besides your warning signs. Our next series, we're going to be talking about business planning. Thinking about your risk management and mitigating your risks is a critical component of your business plan. So being able to identify those risks and refresh that analysis, once or twice a year is an important thing. That'll give you a sense of what are the risks that I was worried about when I did my business plan, and how do I make sure I've got a mitigation plan to address them. Any risks of your vendors or supplier. Let's say you see that one of your critical suppliers is laying off a bunch of people and think, oh my God, are they going to still be in business? They're one of my main suppliers. If they're laying off, 20% of their workforce, how do I know they're still going to be in business? Thinking about a business continuity assessment, which we'll talk about a little bit more. And then you can also consider outside sources to assist in identifying risks. So if you have a SCORE mentor, this is something that we help clients with. If you've got a CPA, if you've got a business attorney or other mentors that you've worked with, if you think about, hey, what are the risks in the business? This is the list of 10 things I'm worried about. Any major things I'm missing? These outside sources could also be a good resource for you. One of the critical tools that a business owner can do in thinking about their risk assessment is what's called a SWOT analysis. So you've probably heard about this. This is a very common tool in business. And this is a way for you to basically look at the factors that the kind of current state of your business as it sits today, and refreshing this kind of once a year as you refresh your business plan. It's looking at strengths and weaknesses of your business, which are really internal factors. What are things that you're really good at in providing to your customer? And what are the things you really need to improve on to make sure you stay ahead of the competition and meet your customers' needs? Then you've got the external factors, which are the opportunities and threats. So the opportunities meaning, hey, there's, our town has been really growing lately, and I've got a lot of opportunity to reach a new market segment. Or I've noticed a big boom in terms of this popularity of this product or this kind of service. I see that the market opportunity for this is really big, so I'm going to go capitalize on that. And then threats would be, who's your competition and what are they doing? Now, I've got a note down here at the bottom that says cast a wide net in preparing this analysis. And what I mean by that is, this is kind of hard to do because when you're looking at the internal factors, it's easy to see well, this is why I'm good. I know what my business is. I'm really good. But sometimes it's a little hard to admit what you're bad at. Not bad at, but maybe less than good at, things that you need to improve on. So try to take a hard look at yourself in terms of what you can be, what you can do better at. Don't beat yourself up. Nobody's perfect. But try to look at a balanced view in terms of what you're good at and what are the few things you really need to improve on. Then the external factors, sometimes it's easier to see the opportunities than the threats. And the threats is really around competition. Because if you're thinking about your service, you want to cast a wide net in terms of what customers may be doing with their money, in terms of choosing your service versus somebody else. So for instance, if you were running a hair salon and you think to yourself, well, my competition is other hair salons, maybe your competition might be more than that. Maybe it might be other businesses that are in the personal care space. Maybe it's a massage therapist. Maybe it's a nail care salon. It could be a lot of different things where people who are thinking, I've got a certain amount of money that I'm going to budget for these types of services. And maybe they're going to choose you versus somebody who's tangentially in the same space, but maybe not the exact same business. So think about that in the sense of, a personal trainer is another one, right? If you wanted to start your own personal training business and you think, well, my competition is other personal trainers. Your competition is also gyms, large gyms, smaller business gyms. Your competition is also people who have gyms at their workplace. So thinking about casting a wide net in terms of your competition and what those threats are is important as part of doing this analysis. I don't have an example of a SWOT analysis for a business in here. I could have thrown one in here, but it would have been, kind of really busy. But you can find, if you search around on this for example SWOT analysis, you will easily find 4 or 5 different examples of real businesses, some famous ones, some smaller ones that have done this kind of analysis. And that will generate some good brainstorming for you to think about what would be applicable for your business. All right. So you've identified your risks. You've gone through and you've come up with a whole list of things. And you're like, oh my God, these 30 things can go wrong. What do? First thing you do is you don't panic. You start this next exercise, which is to say, how am I going to measure my risks? And the first thing you want to think about is, what's the effect on your potential earnings and your cash flow? What's the financial impact on your business? If this were to happen, what would happen to my business? Think about this also through the lens of your opportunities for future growth. So maybe you're thinking about planning down the road if you want to grow in the next 2 to 3 years. This risk may not have a huge impact on you now, but it could have an impact on those growth plans for the future. Thinking about the costs related to the risks should it occur. So there may be costs related to mitigating that risk in addition to the impact on your business itself. What would change in your business if this risk were to materialize? Would it be a temporary setback, or would it be a fork in the road moment where you've got to say, I thought I was going to go down this path, but now I've got to really course correct and go down this path. And that could be like a seismic risk that impacts your business or the industry that you're in. And then you also want to think about weighing the cost versus the benefit of the mitigating control. So an easy example here is insurance. And a lot of times people will say, I've got a risk, I'm just going to get insurance for it. But you may find that the cost to obtain the insurance policy is so prohibitive and so high that it's not going to really give you a benefit to mitigating a potential risk, because the risk may be so low to actually happen. And the financial impact of that may be so low that the cost to obtain that insurance coverage may not be worth it. So that's just an example of thinking about if that risk is so high and so impactful to my business that I've got to put a mitigating control in place. So now we're going to go to this matrix that I love. So down at the bottom here, you can see I co-opted this from, there's a business owner named Meredith Messenger. She runs an insurance agency in Hartford. She taught a couple of webinars for us. They're on our YouTube channel. One was on risk management. One was on insurance for small businesses. Very impressive. She had this slide in our risk management one, and I had to just put it in here because I love it. And this is how I think about, people doing a risk assessment process. So what you want to think about when you gathered your whole list of risks, you're going to measure it along these two metrics, or along these two matrices. So the first is going across is how likely is it that this risk is going to happen to my business? And you can measure it, you could do small, medium, low. I like this one. It's rare, unlikely, moderate, likely, certain. Then you've got going down the side, what's the impact to my business if it were to happen? And it goes from negligible, low, medium, very high, extreme. Then what you do is you plot each of these risks into this matrix, and this will help you focus on where you want to think about a mitigation plan. So for instance, flooding or a terrorist attack could have a really extreme impact on my business based on the nature of my business, but it's pretty unlikely that it's going to happen. So we're going to call that rare. And, even though it has an extreme impact, it's rare. Then you've got, an employee theft of funds. It might have a medium impact on my business, but I think it's rare that it's going to happen. The computer system's down for a day. For my business, not a big deal. It's low impact, and I don't think it's going to be, likely that it's going to happen. Then you've got up here, like if there's a data breach is a risk. Well, I think that's likely to happen just because there's been so much activity with cybersecurity. Businesses are constantly dealing with data breaches, and I think I've got a risk here. And if it happens, it's an extreme impact. I've got customer impacts. I've got all sorts of problems I got to deal with. That's a likely risk, and it's an extreme impact. Same thing on past due accounts receivables and key employee departures. It's going to happen. It's just a matter of time. There's a 0% chance that it's not going to happen, and it could have a big impact on me. So I'm going to call that extreme. So as you think about plotting these risks out in this matrix, you'll see that the color coding helps you decide where you want to focus your attention. Items that are in this upper quadrant, in this kind of red quadrant, are things that you want to think about putting a mitigation plan in place for. Items that are in the green one are ones that you kind of want to keep on your list of risk items as part of your business planning. But unless the category moves, you probably don't need to do anything serious about it, except maybe some, maybe some minor mitigating controls, but you don't need to go crazy on this one. And then the ones in the yellow are kind of more judgment calls. Like if you think maybe you want to put more attention on some of the ones in the middle, just because you think that if it does happen, maybe your risk could be a little bit higher than you've categorized it, and think about what the mitigation plan would be for that. So this is just a way for you to help sort out I've got 20 risks, what do I do about them? This helps you prioritize those 4 or 5 things that you want to think about. What are the root causes of the risk? And is there anything I can do to help mitigate it? Because there's nothing you can do about something like a terrorist attack. But, there is something you can do about like customer accident. You can make sure that your facility is safe for customers, as an example. Kathleen, any questions that have come in or anything you'd offer to amplify what I've mentioned so far?
There are no questions thus far. I do want to talk about this slide in particular. I used a tool that's a Six Sigma tool called a failure modes effect analysis, which is an Excel spreadsheet, which does the same analysis that this does, but it assigns a numeric score 1 through 5 for the impact and then the likelihood, similar to this. The two things that are also part of it is that if the number gets above a certain level, the cutoff, which is determined by the individuals doing the exercise, there are 2 things that you're meant to do as a result. What are you going to do to try to prevent the problem? And what are you going to do if the problem occurs? So that in advance, you're making some decisions, especially for the ones that are in the red here, because just simply knowing about it isn't sufficient if it's red. And then yellow, you can decide whether you want to try to prevent it or you want to try to mitigate it if it occurs. And if it were me, I would try to prevent the ones that were more likely to happen and they were middle of the road. So say the one that says employee injury.
Yep.
I would work on that one and try to prevent that as much as possible, because the ones that are unlikely to occur, or the ones that are certain to occur but have low impact, you could mitigate them after the fact. So that's where judgment comes in, is to say, what do I have the possibility of preventing it? If I don't, then I better have a really strong mitigation plan in place. And if I do have the possibility of a prevention plan working, then I don't need as much of a mitigation plan, unless it's in the upper right-hand corner of this, where it's highly certain and highly extremely problematic. The impact is high. I would have both.
Yep. No, that's great. That's great advice. It's a great compliment to what I had just said, because I think you get to a point where having that, this is kind of the first step in the data. And then the second part, like you said, is to say, what am I going to do about it? If I can't control it, what would I do if it happens? And that's nice to have a plan of attack, because then if you've got that plan of attack and something does happen where you have your data breach, you can go, okay, we had a data breach. Remember, we planned for this. Let's dust off the plan, open up the playbook, and here's the steps we're going to take in terms of a data breach. Here's what we need to call. Here's what we need to do, because I've already planned for it, anticipating it might happen. So great advice.
And we used to, for certain things, because we were a technology shop, there were certain things that disasters that we planned for and practiced for. So if there's something, it's kind of like doing fire drills in school. If there's something that you think is highly likely to occur, then you not only want to have a plan, you want to actually practice solving the problem, like forcing the problem to happen if you can. Obviously, you don't want to get an employee injured on purpose. So, but what you could do is pretend an employee got injured and go through the steps of what you would do and practice that. So, because what's practiced and what's rehearsed is easy to execute when panic strikes. It's hard for us to think about how to solve a problem if we haven't practiced it first. So definitely practice does help when it's something that you think is highly likely to occur or could be a serious problem, which is why schools do drills for all kinds of reasons now.
And companies do this too. I mean, the companies I worked at, they'd bring in, these are large companies, they'd bring in an outside consulting firm and they would basically throw a scenario and say, okay, here's what's happened. And here's what the impact is on your business. And then they've got a team of leaders around trying to figure out, okay, now what do we do? And it's a whole exercise. It's a day-long exercise. And then they debrief and say, all right, what do we do well and what do we not do well? I mean, so even large companies, will particularly focus on this kind of thing. All right, so let's talk about risk mitigation. And these are just some steps that you can think about. None of these are perfect, but these are just some kind of brainstorming ideas as you think about, you can't eliminate every risk, but how can you gather more information and think about what you can do? So in terms of, the competition and vendors is where I started here. And in terms of knowing your competition, here are some things you can do to try to research what they're doing in terms of their advertising, their product lines, their pricing. How do they treat their customers? How do they treat their employees? Any intelligence you can get about them will help you understand them better, to think about, what can I do to make sure I'm staying ahead of them? As you think about your vendor relationships and any equipment, thinking about this when you're doing your business plan, is identifying in your business plan, what are the key vendors that I have? What's the key equipment I have? How do I feel about those relationships and that equipment? Does that need to be replaced anytime soon? Do I need to have insurance or a service plan for something? Because, it's such a critical component. And if it were to go down, I've got such a big risk associated with my plan or my business. And then we talked about concentration of vendors and suppliers. If you can have backup relationships for key dependencies, that's a nice mitigation plan to have for any vendors that you've got that are key. In terms of business continuity, a lot of times you'll hear the phrase a disaster recovery plan. So this is in the event of, depending upon if it's a physical location or a system issue, you're going to want to think about, if something were to go wrong, what would I do to keep my business running? So if you've got a physical location, how can you continue business operations if you were to lose part of that location? Do you need to establish some sort of manual system if your online system, your ordering system goes down? How can you maintain customer ordering and delivery? How do you think about training your staff to continue operations? We talked about the risk of key employees. Cross-training staff is a really important task in the event that you've got someone who's really good at, these 5 tasks and somebody else who does these other 5 tasks. Taking the opportunity to cross-train them on each other's really important tasks in the event one of them decides to leave, or if they have to take an extended time off for another reason. So cross-training staff is important if you've got those key dependencies on employees. Thinking about your business operating systems and having backups, having a list of any staff tasks or contacts in the event something were to happen, you have something you can review. Understanding if you've got if you've got contracts with your key vendors, if there are any provisions for if they go out of business, what happens with them, or any, catastrophic issue that happens with your business that you need to tap into them for support. And then knowing if you've got somebody like that example I gave before about that one facility, like, is your relationship with them, if they're such a key supplier for them, understanding what their risk management is probably not a bad thing, to the extent that they'll share with you how they can maintain that supplier relationship with you if they're such a critical component. And then in terms of information technology controls, this really becomes an issue for larger companies who have got, product inventory systems or payroll systems or access to confidential information. You want to make sure you've got really tight controls over login information, where you're keeping certain information on shared drives. If you're sharing a Google Drive, making sure that certain people have access to only what they need and not confidential information that they shouldn't have access to. Cybersecurity is a really big issue. It's easy for me to say protect your systems with firewalls. This is a whole, there's a whole list of issues that you need to deal with and thinking about cybersecurity. If I can make a quick plug, we've got a really good webinar that we did over a year ago with a gentleman who runs a cybersecurity consulting business. Highly recommend you check that out on our YouTube channel. It's only about an hour long, and he provides us some really good information to think about in terms of cyber risk. And it was very eye-opening for me. I hosted that one. It was eye-opening for me because I realized that cyber risk applies to a lot more businesses than I would have thought of going into that session. So highly recommend that one just for your own knowledge. And then I talk about kind of levels of access for sensitive data on any shared information drive that you have. Kathleen, were you going to say something?
Yeah, I just want to chime in here and say that these two things being juxtaposed on the same slide is interesting because oftentimes part of a disaster recovery plan is to store more stuff in the cloud so you don't have to worry about a physical premise. Obviously, if you're selling physical goods and it catches on fire, that's another story. But if a lot of what could go wrong is, say, the power goes out, or there's a flood and no one can get in the building, or there's a pandemic and everyone's locked down or whatever, then the answer is to store a lot of data in the cloud so people can do work from home, which then makes the information technology problem escalate as a result of the fact that your data is stored in the cloud. So if you're going to create a disaster recovery plan that includes storing data off premises, which is safe on one hand, on the other hand, you want to make sure that you have appropriate controls and monitor wherever that is stored to make sure that it's not some fly-by-night organization.
Absolutely. Great points. All right, thinking about employee related. So to the extent you've got employees in your business, here are some suggestions to mitigate any risks that could come up with that. You could think about background checks and pre-employment screening, making sure that you've got job descriptions and duties and communicate clear expectations to people when you hire them. This is probably the biggest issue that happens with employees having a hard time fitting in with their new role, is clearly understanding their role and their responsibilities. This can happen a lot of times with businesses that are growing rather quickly, or they just need people, especially in this environment right now where a lot of businesses are searching for staff. It's like, let me just get somebody in, put them to work. Okay, you're off and running. You want to make sure they've got a clear understanding of what they're doing and they understand the communication chain back to their manager so that they can know how to ask questions and when they can make sure that they're doing everything they need to. I just mentioned cross-training staff. Another component that is really important is periodic evaluations and feedback. And this is something that really large companies do well because a lot of them have really structured programs. They do it a couple times a year. It's part of an employee evaluation HR process. Smaller companies, this sometimes can go to the bottom of the list in terms of having, clear feedback sessions with employees, but it is really important. It's important for employee retention. It's important for job satisfaction. A lot of times, if you ask somebody like, do you give your employees feedback? They'll probably answer, yeah, I give them feedback all the time. But if you step back and ask yourself how that feedback is being delivered, there may be some room for improvement there. Most managers, I was guilty of this as well, are quick to provide the negative feedback in the moment because something happened that didn't go well and you said, oh my God, you did this wrong. We need to fix it. Or, why'd you screw this up or something like that. And oftentimes the great job compliments don't necessarily happen, right? So it's important to provide balance to the positive and constructive feedback. And it's the good way to do that is to have sit-down conversations with your employees at least a couple times a year, more often if you need to, if there's, kind of performance problems, and to sit down and say, all right, here's how things are going from my perspective. How are things going from your perspective? Spending some time in advance to prepare for that and write down or type up the things that you think are going well with some concrete examples. Hey, you did really well with this client. Let me tell you where I saw, you did well with this client interaction, but this one could have gone better. So spending the time as the manager to provide that and prepare for those meetings is really important. So I've kind of beat that one to death, but it's an important one for employee retention. Another obvious one is benefits and compensation structure. This has become a really tough one in the last couple of years because there's been a lot of pressure on wage demands in the market, and businesses have had to increase make their salary offerings a lot more competitive to keep them, which is putting a lot of pressure on their financial outlook. So that's been an important one. This next one, a lot of times when folks are getting started, they're going to just hire whoever they know to help out. Just be mindful if you're hiring friends or family of other employees. May seem like a good idea at the time if they got the right expertise, but it could create some conflicts and some challenges just in terms of the workplace dynamics. So just keep that in mind. It could be a little problematic. We talked about keeping a safe workplace. You can also provide incentives to avoid injuries and damages to either product or to the workspace. So think about that as an incentive program instead of just kind of penalizing people if there's a problem. And then it's also important, if you've got a large team, to talk to them about risk management, why this is important for business continuity, why it's important for them, why it's important for the customers. And it's not just about you keeping your business going, but it's an important topic, and knowing that you're focused on it as part of your business planning and running your business day to day. Last topic, I think this is the last topic around mitigation, is cash controls and your personal risks. So these are just a list of items to think about in terms of cash. Separation of duties is one that you will read a lot of. It's kind of the bare bones topic in terms of cash. If you've got multiple people in your business who have access to disbursements and receipts, you want to make sure that you are keeping an eye on who has access to putting money in and out of the bank account and who is actually looking at the bank statement and reconciling it month to month. Because if you've got the same person doing those things, that is a ripe opportunity for fraud. It's a textbook issue when it comes to fraud. So thinking about that, and having a level of authority for disbursements, a lot of times businesses will say, I'm going to delegate some responsibilities to employees so I can take some stuff off my plate, but I'm only going to delegate disbursements up to this dollar amount, and it depends on what makes sense for your business. This dollar amount and below, these employees can make those disbursements or charge this amount of money, but anything over this threshold has to go through me as the business owner. Making sure that you understand how your deposits are insured through the FDIC. As we talked about cash flow last week in budgeting, I talked about putting reserves or kind of some contingency or cushion in your cash flow budget to the extent something goes wrong and comes out of nowhere. That's another way to kind of think about cash flow risk mitigation. And then just tapping into your line of credit only when you really need it. Thinking about that as another backup for cash flow funding in the event that you've got any cash pressures from your business, you can tap into your line of credit as a mitigating action. We haven't really talked about personal risks, but these are just as important to consider as a business owner. A lot of times, people who are just starting out or have a small team, they're doing everything themselves. And sometimes it's not a recipe for long-term success because you could end up burning out. It's easy for me to say this, much harder for all of you to do this, but having set work hours, thinking to planning your work with a balance, setting realistic goals for yourself, I'm a big list person, but I also know, what I can actually accomplish over the course of a week. And if I set up a long list of things to do in one day, if I ask myself truly, can I really get all that stuff done in one day? If I'm going to constantly be not achieving what my goals are for each day, then I'm going to be setting myself up for disappointment and putting more pressure on myself to get everything done. Planning work with a balance is a real challenge, especially in this environment when so many people are working from home. The lines between the workday and the non-work day have blurred dramatically. And what this could end up happening is you've got people who are kind of working over the course of 15, 16 hours a day, sometimes on work, sometimes a little bit off work, but it's important to carve out that off work time to reset your brain and making sure you're interacting with your family and your friends and getting that kind of downtime to recharge your batteries. To the extent you can leverage your staff or an assistant to delegate, being able to train them and lean on them. This is a hard one sometimes too, because a lot of times people will say, well, it's just easier for me to do it myself. I'm just going to do it myself because it's faster. But thinking about delegating to someone on your staff or an assistant, if you think about that as an investment of your time now to train them how to do something, and that time is going to pay off in dividends because it's going to free up more time for you personally once they start taking over those tasks. So it may take you some time now to train them, get them up to speed. You're going to get that time back in multiples once they start doing those tasks on their own and you don't have to do them anymore. Thinking about leveraging your support system to the extent you can for family and home needs. And then just some other ones to keep in mind that are best practices: life and disability insurance. Critical if you've got a business partner, understanding what would happen if one of you were to become incapacitated. Working with a business attorney on this is really important, especially if you're a 50-50 partner. And then having an exit strategy for your business. What if you want to sell your business? What would you do? Or if you decide you want to retire, or God forbid something were to happen to you. This is something that none of us like to think about, but it's really important as a business owner. You've got a lot of assets at hand here. You want to make sure you understand what would happen to your business if something were to happen. And a business attorney can really help you think through this in terms of your business planning and your estate planning for both business and personal risk. So not the most fun topics to think about, but they are important. All right, it's 12:45. We've got plenty of time for questions. I'm going to pause there. Kathleen, anything that I missed throughout this that you think we should also add to the conversation?
Nothing you missed per se, but some nuances or scenarios that I wanted to maybe cover. The first is that when you talked about concentration risk, if you had only a few customers, and one scenario that's increasingly common these days is, say you're an employee of a company and the company decides to spin off your entire department, and so now it's formed as its own organization, and you might be one of the owners of this organization. It might be 3 or 4 of you, and you decide, oh, rather than just have nothing, we'll form this partnership and go in together and we'll do work for them. And now they don't have to pay our benefits, et cetera. This happens a lot. But effectively what that means is that you're now they're your only customer. So you have a heavy concentration in this one company. And so one of the immediate risk mitigants would be to try and find other customers. And the other thing is related to that, when you talked about partnerships, Steve, was I thought about in the work that I did as a banker, I often saw partnerships where one wanted out of the partnership and the other ones wanted to keep the business going. So you not only need an exit strategy for the business, but you also need, how does our partnership dissolve? What happens if one wants out? If everyone wants out at the same time, that's easy, but sometimes that's not the case. And the third one I thought of was concentration risk to an industry. For example, if you're manufacturing parts that go into autos, and so you've got a wide mix of customers, but they all happen to make cars, you've got a similar risk, because if the industry has a downturn, you're going to have a downturn, even if you've spread your risk around by having 10 or 12 customers.
Yeah, that's a great example. And the on the partnership one, real quickly, I glossed over the fact that having a partnership agreement, especially if you're a 50-50 partner, having a partnership agreement that both of you sign in terms of here's how it's going to operate, here's how the decision-making works, and here's what happens if one of the people wants to dissolve the partnership, here's what's going to happen. Can't emphasize that enough, because a lot of times you could go in and say, yeah, this can be great, we can be 50-50 partners. But if you don't have an understanding of all of that and put it in a partnership agreement up front, 2, 3, 5 years down the road, could be a messy divorce. You mentioned the product and industry concentration. I had a client who was heavily dependent on the aerospace industry and really got impacted when COVID hit, and there was just such a slowdown in that industry. They were like, oh my God, what are we gonna do? And they pivoted really hard and went into a completely different industry and started manufacturing parts it was a completely different industry. And they figured out that they could manufacture these parts, work with this other industry, and get some revenue in the door. And, they were a pretty large organization, and they made it through the entire, pandemic time period and did not have to lay off one person, something they were very proud of. And I was so impressed with how they course corrected industries and said, hey, we can do this. It's not our bread and butter right now, but it's something we know we can do. And they went out and proved it to the customer and did well by it. So really, really good story. So if any of you have any questions, you can feel free to put it in the Q&A box. And if we've got any best practices, we'll take those as well. Seeing anything right now. Maybe we were so thorough. Maybe we scared everybody away with all these risks.
I think that chart with the green, yellow, red is really important, because it's easy to feel overwhelmed, as you said in the beginning.
Yeah.
And that makes it so that you don't have to be overwhelmed.
Yeah.
Because a lot of things that you might think up are probably going to turn out to be green or barely yellow. And you could even make them yellow and orange if you want to further grade them.
Yep. Yeah, no, I agree. That's why I loved this, because it's a way for you to take that, because if you're trying to organize your list, and let's say you go through this presentation again, and you're starting to think through all these examples I gave, and you said, yeah, that's applicable. And all of a sudden you got a dozen, and you think through a few more, and you're like, oh my God, I got these 15 things. Where do I start? Putting it in this matrix. I like the numerical value too, being a numbers person. I like the numerical value too. And then you can basically say, if I assign it 1 through 5, and if the sum of the two is above whatever the number is, 6 or whatever, or 7,
Because you multiply it. You actually multiply it. So if it gets a 5 in likelihood and a 5 in impact, it gets a score of 25.
Yep. So then you get anything.
And then you can, if you're really good at Excel, you can color code the totals so that it comes out green, yellow, and red.
Right. No, that's perfect. That's perfect. And that, like you said, that can hone in and say, all right, I've got these, 5 or 6 items up here. Now let's go think about, like you said, is there anything I can do to help eliminate or mitigate this? And if it were to happen, what would I do about it? And some of it might be, wow, I think this is, something that could happen. I'm going to explore getting an insurance policy. And my insurance policy is my, if something were to happen, I've got insurance coverage to replace that loss of income. But as I mentioned, insurance is not the solution for everything. And sometimes you've got to put certain business practices in place, either adding things or stopping things or changing things, and that can be your mitigation plan. All right, so I'm not seeing any questions, so maybe we should, what do you think? Maybe we should call it a day here and wrap up. What do you think?
Poll.
What's that?
Launch the poll.
Oh, yes, let's launch the poll. Do you want to do that?
Sure.
All right. So we've got a quick poll here we'd like you to answer. One is if you currently have a SCORE mentor, if you can answer that yes or no. And then if you don't, are you interested in signing up for mentoring services? And if you are, we are going to figure out a way to get in contact with you after this. Got a couple people who've responded so far. And while you're answering that, I am going to share with you some additional information. All right, we've got a handful of people answered. That's good. Thank you for responding. So as we wrap up here, here's just some, slide on where you can find more information. This was our last workshop, so you don't need to sign up for that one, but we've got our module 2 coming in June. You can look at score.org/Greater Hartford local workshops. You'll find there all the ones that we have coming up. Check out our YouTube channel, search for Greater Hartford. SCORE, and you will find all the videos that we've got out there. And then if you are interested in getting a SCORE mentor, you can do so at score.org. And then for those of you who have answered yes, I see we've got a few here. We will try to reach out to you and see if we can connect you with a SCORE mentor for the next steps. So with that, I think I will stop the recording for today.